Well, good afternoon, everybody. It's good to be with you. And we've got a great subject this afternoon, how to scale up or sell your practice. One of the things that has come through the last, well, I think more than the last 6 months, actually. We've had GDPR, we had MTD, and then, of course, we had the COVID. And I think a number of us are thinking, oh, God, I think I'll just sell up and, wander off into the distance, and everyone I think would understand that. However, there are a number of us who said, what an opportunity, if only I were younger, and this is a real chance to take this whole business forward. The whole notion of a recession tends to, identify the weaknesses in our businesses, also highlights the strengths. So it sort of exaggerates the good and the bad. And so I was chatting with my good friend Rich. Afternoon, Rich. Oh, no, he's on mic. I can't hear you now. There we go. No. Can't hear you yet. Oh, dear. When you pulled that screen around, you probably pulled a wire out. And to think he's a technology god, honestly. Well, whilst Rich is working out whether his microphone's working or not, Robert, are you there? Well, looks like I'm on my own team. James, are you there?
I am Gordon. How are you doing?
Well done, James. Obviously,
I'm going to end up having to do this whole thing, aren't I?
Yeah, you're going to have to take this one on, buddy. Whilst they...
Don't worry, I'm here as well. It's Robert.
Hello, Robert. And we still can't get Rich. No. You need to do the old plug the wire in trick, Rich. It was working, ladies and gentlemen, literally minutes ago. So whilst Rich is working that out, we were chatting about what was going on out there, and Rich he's a qualified accountant, been in the business for a very long time and knows what's what. Robert, when did you join My Work Papers?
It's almost my anniversary, actually, so just around about a year now.
Yeah, and then before that, you were Billy Big Balls at Iris, weren't you?
A long time ago, about 10 years ago, I was MD at the Iris Accountancy Practice Division.
So you've been working in the accounting profession for as long as all of us, haven't you?
Well, not quite, but certainly long enough.
You see, that's why you're not putting your camcorder on, isn't it? So we can't see how old you are. You're just going, oh, there you are. Oh no, you do look a bit.
In case anyone recognises me, there you go.
There you go. So between the three of us, and then we've got James, we've actually got a number of years of experience. So this subject is actually hugely relevant for a lot of us today. How to scale up, and/or, I think is a better title, and/or sell your practice. So now, Robert, why don't you pick up the mantle of this? Who's on keyboard? Rich, you're on keyboards, aren't you?
Yes, I am. I can hear you, but you can't hear me, or you can hear me?
We can hear you.
We can now.
Your lip is slightly, you've got a delay on your visual and the audio, but we'll work with that.
Okay, so yes, can you see, and apologies, I did a re-plug in and hopefully it's going to work. Can you see the screen okay or not?
All good. Everything's synced up. You're on, Rich. You're on.
Okay, great. I think that's probably the first time you've been able to mute me, Gordon. But anyway, so look, the topic that we've discussed before, and you and I over many occasion, has been the price that some of the practices are selling for, and we're seeing a bit of activity in the marketplace with people making a decision on whether they should buy, try and scale up, or whether they should sell out. And so, we've put together a few comments for those in the marketplace that just really want to understand a bit more that's going on, but also for Gordon and Rob and I to talk about some of the experiences that we're seeing. Right, next slide. So, we've had the introductions, so I'll carry on. So look, and Gordon, please feel free to interject, because I know you and I don't always have the same opinion.
Yeah.
But look, traditionally, when I was in practice, and when I bought fees, you were looking at one for one and up to 3 years adjustment for lost clients, clawbacks. Here, and that was many moons ago. What we're seeing here traditionally is that one for one, but we're seeing again the push down where particularly the partners at an age group older than you and I, well, at least older than me, but also where we're seeing above the one for one, where the firms have got technology in place and also systems and processes, and also young staff, which we'll touch on. But as you're aware, there's also some firms, larger firms, that are selling out on a basis of multiple revenue. And we've seen some examples of that ranging from 6 times EBITDA and even up to 12 times EBITDA.
So that's multiple of profit, I think, is what you...
Yeah, multiple, well, EBITDA, that's a flash word for product, for profit, Gordon, yeah.
So, it's really interesting. Yeah, we do sometimes disagree, but actually on this one, I think by and large, it is what it is. And what I find almost humorous is that many, particularly the institutional funds point that you've brought in there, the accounting profession has now proven beyond any doubt that it's very resilient. We've done, with a background of people dying, there's no gloating about this. I'm trying to put this into context, but the accounting profession, particularly 2020 members, have actually done very, very well indeed through this recession so far, and have proven to be a very, very resilient business, which the institutions are really attracted to. And then some of you will know the institutions are basically, there's a wall of cash there looking to invest. And I think the accounting profession, there's a couple coming through. I don't know if it's public or not, so I'll just have to say mum's the word, but I do know there are 2 huge institutional gatherings. There's one coming in from Europe. Again, I'm just a bit coy about non-disclosure agreements. And then one of our member firms down on the South Coast, they've been given effectively an unlimited war chest to go out and buy whatever they want, type of thinking, all of which are calculated on a multiple of profits. And then, this is the funny bit, they then say, so what does that mean in terms of a multiple of turnover? So they still come back to, oh, that's 1.1, 1.2 times fees, or whatever it turns out to be, although it is actually calculated on the point that Rich was making there on its profitability. So the market was really going humdinger. It took a little bit of a back step, as everyone would expect, when COVID struck. But now we're seeing people gathering their thoughts again, and it seems to be moving back on, pretty well back on schedule from 7 months ago. People seem to have picked up gathered their thoughts, dusted themselves down, and are moving forward again. So the market price was going to fall down, it was, but I'm thinking and seeing people are more interested in buying firms. It's almost becoming a buyer's market again so quickly after what seemed to be a panic point.
Yes, again, another thing that we see is the firms that are doing the deals on the multiple of profit. There's some handcuffs being attached to those business owners that have sold out, and there's the ability to earn out a higher amount and for the price to adjust. And so those earnouts are going, they're basically golden handcuffs. So they're handcuffing the seller for 2 or 3 years. Benefit of that is the transition to the new owners. And also, with the old traditional model where the people would just buy out on a percentage of fees, and in a lot of cases, the previous partners lost, or the previous owner lost control of what happened post-settlement. And then, then they started getting slapped for the adjustments. The model that if I was still in practice, I prefer is an earnout model, assuming that you did want to stay with the new firm and help with the transition process. So again, we see the second way more associated to earnout models, where the first traditional way is basically here it is and run out the door. So I suppose, one of the things we want to touch on today is, where is the difference, and how do you get ready for that, what I call the crossroads of, do I buy, do I sell, or do I want to try and scale up organically? So maybe I'll just run on to the next couple of slides that we have, and then we can chat through those. So I suppose, I always use the analogy, you can have the best hamburger made down the road, and the person gives the most service, who's generally the partner, and all the locals know them, but they generally don't make a lot of money, because again, a lot of the chargeable time and revenue from the practice is coming from the partner, or the partner level. Whereas you take the McDonald's approach, which is systems, processes, standardization, and from there, it doesn't really matter where you are, because you can cookie cutter those across various locations, and then and get the the benefit of the extrapolation of volume rather than value. So volume versus value is another argument, and it's a good one in your practice. Looking at yourself and saying, am I a value practice or a volume practice, or do I have a hybrid of the both? Do I turn the compliance work into a factory, which is all volume based and process driven, and my value stuff is the icing on the cake for revenue?
Well, I'll put my video on because I've got an important point to make. So you put the video on when you've got an important point to make. This is to me, it's the hub of the whole discussion, because my experience of accounting firms is that the most rewarding bit of being an accountant is sitting with a client and helping them with something they really want help with. It could be making more profit, generating more cash, tax planning, wealth management, all that sort of added value stuff. And the clients, oh, thank you very much, that was absolutely marvelous. And they do reward you very handsomely for your input. And you could even coordinate, well, I don't know much about how much pension contribution, but meet John, he's our tax chap. He'll calculate how much the maximum pension contribution could be. So I'm still organizing it and orchestrating it, and it's very rewarding. However, when I come to sell the burger shop on the left, which is a very rewarding business in terms of all the goodness it gives and the way that you might get paid a premium price for the burger, I think everyone listening will say, well, it's not quite as valuable as if I had a business that was entirely on the cloud and we were running everything ship-shape. Clients didn't really get engaged with anybody. The information was processed through, done in the Philippines, outsourced, offshored, and then maybe a little bit of icing on the cake. If it took your fancy, you might do a little bit of tax planning. You might have, go large, as McDonald's would do. So that would be the extent of, adding value. So you can put your cameras on now and add some real value then, Rich and Robert. And I come off the camera.
Well, look, I think just to reiterate what you're saying, when it comes to fee-based billing and value-based billing, the price is, is that old cliche of the price is equal to the cost plus the perceived added value, which is fine, and it's a type of work that I used to enjoy when I was in practice. But the reality is too that a lot of the fee-based income comes from compliance work, and you have to turn that into a factory. You have to have that structured, organised, and workflow driven. And look, you've got to have a hybrid of that in a practice. And again, the practices that are selling for multiples have those clients in there because the buyer coming in realizes they can leverage that and provide those extra services.
Yeah. I mean, that's exactly right. So, I think most people would agree we should be leaning towards the McDonald's model with the option of going large in various areas, which brings you back to the bespoke, which is the most, personally, it's very rewarding, as a fee earner. But as a business person, clearly the systemization of the business. This is a really interesting picture you've got up here, Rich, now. It's a bit of a wobbly road here.
Yeah, well, it's it comes from my artistic schools from tech drawing days. But look, this is an example we use with clients when we do workflow reviews, and we say, you know, what does your workflow look in your practice? And if you drove some data or information into an accounting firm, what is the route that it takes down that conveyor belt inside your accounting firm before, you know, the job gets assigned, before the job gets started with the trial balance import? You know, what is the route that it takes, and you know, does it go around curves and circles? You know, who's actually doing the work? Where are the inefficiencies, and what are the systems and the processes? And we do that because we try and work out the touch points where our software, my workpapers, comes in, and then, you know, we try and work with the client and say, well, if you're adopting a platform like ours, then it's like McDonald's. You're putting the systems and processes in place so that it's a smooth road. Everybody understands the conveyor belt system for that volume-based work.
So, Rich, are you still finding firms where partners will, in the same firm, will still do it their own way, or is those days now literally gone?
Yeah, look, absolutely. So a couple of comments there. We see in the larger firms, they have the dedicated resource to have a person, you know, senior manager or a partner involved to drive change and improve systems, evaluate new systems. You know, they hear things going on in other practices. A lot of these firms belong to affiliations or networks, and they're trying to test this stuff out for themselves. So, but you know, the firms, the bigger firms are doing that. However, the smaller firms, and I classify a smaller firm as anything under 5 partners. The smaller firms, this is where they need to come to the likes of you, if they're not a client of ours, because they've come to me rather than you, Gordon. But if they are not a client of ours, they come to 2020 and they use you as the resource to give them a bit of guidance. And I know that you and I have been involved in a mutual client where you know, we're trying to assist them as outsiders, giving them that fresh look and approach. But yes, we see it all the time where the smaller firms get caught in the muck, in the muck, and the wheels just spin, and they're afraid of change, too busy to change, etc. So I think the thing that people must realise is that there's a lot of experience out there that people are prepared to share, but there's also people like us. That we've got quite a bit of knowledge, you know, particularly, we've got over 1,000 firms as clients. So, you know, we get to see a lot of what's going on.
Yeah.
And this is, you know, this is you know, just a classic slide is, you know, if you know, how does your practice compare against another? You know, if you were going to sell it, if you were going to grow it, if you were going to acquire another fee base and buy fees, you know, where does your practice sit now in terms of ability to scale, the technology being used? You know, are your systems automated? You know, have you got a conveyor belt system for your volume work? And you know, to me, compliance work is volume work. You know, monthly management accounting, most of that is volume work. There's that finishing touch that you have as a partner or senior manager with the clients. However, you know, a bulk of the work being done is volume. Workforce is an interesting one because, you know, we've talked before about millennials and the impact in the practice. You know, we see a lot of firms where they will break down an implementation of a platform like ours into different departments and divisions purely because of the staff they have. Because, you know, some particular generation, you know, in our age group, Gordon, you know, the early 50s, you know, they don't particularly like change and new things. So it's important also to have a mix and start blending in a workforce into your practice that drives changes and can drive innovation, which we'll talk about in a minute as well.
Absolutely. Well, look, I just wonder whether we might just spend a few minutes. No, Rich, could you just go back for a second there? Because unless are you in a urgent rush to get out the door, Rich? You got to dash?
No, I've got plenty of time for you, Gordon.
Because I wanted to pick up on a couple of things there. How does my practice compare with scalability? You know, I get asked endlessly, particularly now with 2020 members who are growing, because other firms have not given the client proposition. They're just not there for the clients. They've over furloughed and stuff like that. So they seem to be growing, and then they've got this scalability issue. And unless they workflow it, they're going to end up, which is where a lot of them are, they're saying, well, I just don't know what to do. I don't know where to turn other than keep working the midnight oil, trying to hire people, which is very difficult when it's all done remotely. So, you know, I can get rid of some clients that perhaps aren't as profitable as other ones. That would help. But what's the thing that would jump out at you guys in terms of, well, what would it be outsourcing? Would it be offshoring? Would it be, I mean, obviously we use my work papers, but the wider issue of what my work papers represents is adopting technology. I mean, if you were to prioritize it, where do you see the firms striking gold most successfully in terms of making them more scalable?
Okay, so I'll chip in first, and maybe Robert might want to add. If I was buying a practice now, the starting point for me would be looking at the systems. Are the systems documented? Understanding how jobs come in the door, you know, how information comes in the door from a client, and you know, what is the system flow. And I always refer to this flow of the river. And I was having this discussion this morning with a partner in a firm. We were talking about a flow of the river and information coming through. And you don't want locks all along the river, because you know the locks create a build-up, which generally is associated to particular people and also associated to systems and processes. So if you can have the river running smoothly, which is effectively your workflow, understand the visibility and transparency of where that is at any one time. That's where we see a lot of issues with the firms that we deal with. They just don't know where jobs are at. There's no visibility. Now, that doesn't really matter whether it's internal staff or outsourced staff. And we have a lot of clients that use outsourcing in the Philippines and India. And I think, you know, the benefit of our platform is that there's total visibility, and we don't charge by users, so we charge by jobs, and so, you know, it encourages people to explore other options in terms of workforce. So yeah, the key thing I see is the paperless environment, which enables and a technology that enables them to see where queries are at, where internally, or you know, review points internally, where queries are at with their clients, where jobs are at, that whole workflow management. And from the workflow management, the key thing is to standardize the work paper packs that you use for your different types of engagement. Again, it's like McDonald's. You know, to me, you know, you've got a hamburger, a cheeseburger, a Big Mac, a fillet of fish. Comparison to management accounts, year-end accounts, an audit, a charity audit, etc. So you need to step back and look at your systems, your process, your standardization of your forms, and you know, and how you do your work and how the work flows through the practice.
Right. Well, Robert, did you want to add to that? Because I couldn't have put that better myself. I thought it was exactly where I sit. It's all about trying to systemize the business using the technology that's available today, with a mind that it's going to change tomorrow, because technology's got a habit of changing.
Completely. And I guess, yeah, going back to your kind of introduction at the start, Gordon, since leaving Iris, I've been involved in the world of venture capital and helping small business realize the value that's locked up inside them, whether that be through achieving growth, higher profitability, or just making themselves more attractive to potential purchasers. And I think that a lot of lessons that are applied in that, most of those weren't accountancy firms; they were just general businesses. But what kind of I've got to be a little humble here. I'm probably the only non-accountant out of the 100 or so people on this call, and yet I'm being asked for my advice as to how to increase value. And typically, I've worked with many outstanding corporate finance accountants over the years, and it's really, we've got to start taking our own advice. As the accountancy profession, you guys are out there with your clients all of the time, talking about some of the key metrics, recurring revenue. You're responsible for, or you're part of, a professional services firm that has a very, very high percentage of recurring revenue. You have unbelievable customer loyalty. You've worked really hard over the years to sort of build that up. That, if you add that to the levels of profitability within your business, which we're going to talk about in a minute as to how potentially you can increase that, you should really be thinking about how you can achieve high multiples on high levels of profitability and be in a growth market with really loyal customers. Now, if you're advising your clients how to maximize the value, then why are you as a profession still accepting 0.8 to 1.2 times annual fees as a valuation on your practice? Don't think of yourself as an accountancy practice. Think of yourself as a growth, high profit, recurring revenue, professional services businesses underpinned by excellent technology. If you think in those sorts of terms, then the sky's the limit when you come to actually realize that value.
Yeah, very good, Robert. And I would add to that monthly subscription. Yeah, people love monthly subscription. Sorry, Rich,
Okay.
I think we just stuck to that slide a bit longer than perhaps you were wanting to. I'll pass it back to you.
No, you're right. So this leads to, the question, and I think everybody needs to work, when you're in business and when you get, particularly, Rob's talking about corporate world. When you're in the corporate world, you always work on a 5-year flip cycle. And accountants in their own practices should work to the same. And so they should say, every 5 years, I've got a goal to get to a crossroad where I either buy, acquire another practice, or I stay where I am and try and grow organically, or look to sell. Now, I use these words ADRI, which is out of the Business Excellence Framework, which is approach, deployment, results, improvement. So, you should have your 5-year plan to get to a crossroads where I'm trying to put myself in the marketplace, but I'm going to create an event for myself, whether that's to buy more or buy fees off another practice or take over another practice because I've brought in technology and I can scale because I've got systems, processes, technology, or I keep where I'm going but making more money because I brought in those systems, processes, and technology, or I sell. Again, because I've systemized the business and somebody can take over, like Robert said, where it's turned into a machine making money rather than a burden where I'm trying to sell my own time. So,
yeah.
The key thing there is, set your targets, set what you're trying to achieve, because there's the old saying that I always use internally here is if you aim at nothing, you hit it with surprising accuracy, which is actually quite well known for Rob's dart play. But anyway, the key, I was expecting a bit of retaliation there, Rob, but anyway.
I was on mute. Expletive deleted.
So look, I think the key thing, and this is generally a weakness of accountants. It's like the plumber has the worst house in the street for plumbing, and the builder has the worst built house in the street. Accountants are notorious for not looking after their own affairs and their own business, and not working on their business, rather than getting sucked in and working too much in it. And there's always got to be an innovation area to your practice. And you can't let other people drive that. You've got to make the time to innovate.
So let's pick up on that one, Rich and Robert, because this is very timely. We've got an accounting practice. Our office is coming up for renewal. So this is the sort of pretend scenario that we're up against. We sit down and we say, what if we did not replace the office for the foreseeable future? What would happen? And of course, a number of 2020 member firms have actually had this discussion, and for the time being, all of them have decided not to have an office, to become officeless. Now, nobody knows how long this is going to last. It might just be a passing fad, but they are innovating. They're coming up with things like, well, if you're living, as I do, on the outside of Leeds, you don't need to commute into the Leeds centre anymore. You don't need to do public transport, so that's all good. You don't need to therefore get up and crack on about 6 in the morning. You can give yourself a little bit of do something else, do some exercise, take care of yourself. Go and find an office that may be, in fact, very local to me. There's a pub that they've created, the coffee shop, which is now an office where you can wander in and you pay a ridiculously low amount, like £5 a day or something, and you can get fed with coffee all day, that sort of thing. So at least you've got company, and none of them work for the same company. But I just think that's quite an interesting discussion to say, what if we didn't have an office? What if, as our joint client you referred to earlier said, we are never going out to do an audit again? What would that look like? A completely remote audit. So I think when you lay down the challenge, accountancy firms are more than capable of imagining what could happen and therefore make a decision. I think the problem is, as you've alluded to, Rich, is people don't like what they see. You think, oh, I'm not sure about that. I think I'll just go back to the office. I like that. We've always done it that way. And same for remote auditing, and same for some of this technology, which the youngsters particularly, I hate to be ageist, but the youngsters look at me sometimes and say, well, get with the program, Gordon. You've got to get with it. If you're not embracing some of this technology stuff, you are going to be yesterday's man way before your time. And looking at so it's not a generational thing, because the three of us, with the exception of James, could easily fall into that camp, could we not, of being, oh, well, they don't understand, the technology. So I think we can innovate, guys, don't you?
Look, you've always got to be asking the question on how you innovate, and you have to drive it. It comes back to one person, and that's the person in the mirror in the accounting firm, and you've got to look in the mirror, and it's yourself. We see many instances of people trying to palm it off to other members of staff, and it just ends up in tears. And so you've got to make time to work on the business and innovate and drive change, and always just achieve something small, get that done, and then keep on the road to implementing to implement incremental change in the practice to improve it. And then I'll just jump to this next slide. Then you'll be in a position to create more profit. You have the ability to scale, and it'll improve your revenue. And these are the key things that we work with our clients on, because we have to work with them on these things, because we have a stakeholding by them using our software, because our software impacts on all of this. When they're using my work papers, the technology they use in their practice, we fundamentally look at the systems and processes in the workflow that flow through the whole practice, from when the data of the client comes in whatever form that is, whether it's an import from a trial balance from Xero to an integration with CCH or Iris or whatever with the accounts production, or if it's a management report that they do every month with the likes of Futurely or Fathom or whatever. They're using our product, our software, to validate the numbers, reconcile the numbers, check the numbers before they punch out those reports. Because in the past, when people have gone to their monthly management reporting particularly, and taken information direct from the bookkeeping system to the reporting tool, there hasn't been that checkpoint, and the little simple programs and checkpoints which don't take long to do, that we're documenting in our platform, so that again they become systemized in a process. But those are the things on the screen there. Those are the things that we look at when we talk to our clients, and they're driving those three things, which I'll keep moving because we're running out of time. And Rob's going to speak about those three items now. So, Rob.
Great, thanks. So you want
to chip in on that before we move on?
Well, I'll take each of those three in turn then. Rich, if you wouldn't mind just driving the slides, we'll start with number one, which is around net profit. So look, I mean, the bottom line is that a large proportion of fees earned are still for compliance services, much as we like to think of ourselves as business advisors and so on. And a lot of our time and resources spent doing this kind of work. I guess the challenge is that although this is obviously vital, it's becoming less valued in some ways by our clients. It's definitely a commodity, almost a necessary evil, submitting returns to HMRC and so on. And the expectation around speed and accuracy is also only going up. Therefore, practices are still using paper files. Even those are emailing PDFs, scanning and uploading files on their desktops or office servers, who are sort of passing work between team members physically in files, are now basically at a major disadvantage. Apart from errors creeping in, there's a big reliance on key individuals to smooth the process. Often the people on this call. It's just so damn slow and inefficient. So if you can handle the same number of files with fewer staff, do more of this compliance work with the same number of staff, or importantly, free staff up or yourself to do other value-adding work, your net profit is inevitably going to grow. James in a minute is going to run through exactly how easy it is, for example, to create a file, roll forward files from year to year, which again could save an enormous amount of time and reduce errors. Access all the relevant supporting documents from within the trial balance. All these things save time. They reduce duplicating effort, and ultimately they make that whole kind of compliance process much, much more efficient. So our clients are consistently reporting hours of savings per file, which can go straight to their bottom lines. Okay, so multiples. Now this is a lot more subjective. I guess it's harder, if you want to move the slide forward, Rich, it's harder to agree, measure and affect multiples. It's hard to tie down, but there are some things that definitely damage the multiple. Businesses, for example, that are too reliant on the vendor, the partner, the senior partner or the team or whoever who are looking to move that practice on. So that's both in terms of client engagement, because clearly they've built up a strong rapport. Often they've gone out there and won those clients themselves, but also importantly how the business runs. And so those businesses that are too reliant on that vendor are inevitably going to attract a discount. So the way I put it is we all like to think of ourselves as indispensable, but that's actually the opposite of what we should be seeking to achieve. Be dispensable, if there is such a word. So I would say this, wouldn't I? But if everyone in your practice can log on from anywhere, jump straight into their allocated files, see exactly where they sit in the workflow, be prompted to do their tasks with escalations and sign-offs automatically flagged, there's no need for someone to supervise and oversee all this stuff and make sure that this stuff is moving through the process. And that's just the internal stuff. Client records, data and contact is a very big part of what we do. And the more this is codified, the less chance there are of deadlines being missed, errors occurring. So ultimately, I'm talking here about reducing the personal reliance on you, the vendor. An acquirer has got a better chance of slipping seamlessly into the driving seat, if you like, as you vacate it without the practice missing a beat. This reduces risk and has a real impact on the premium someone's prepared to pay for a practice, and therefore obviously the multiple. So again, in a moment, James is just going to talk a little bit about workflow management. Our workflow manager is an awesome tool, allows you to enter and track deadline dates, gives you reporting on the status of every file in real time, a great summary of your whole team's work in progress. Also, we all know that so many are working remotely. Collaboration with your colleagues is even more is essential. So live file status notifications, automatically flagged or emailed, shortens the time it takes to sign off on the files and really reduces the reliance on any one individual or bottleneck. So we're talking now about the top line. It's not the only factor in achieving a strong multiple. There are other things as well. The old-fashioned stuff, the geography, keeping up-to-date records, and so on. But actually, the top line is critical as well. We have talked about how you can increase your top line by being more efficient. Managing more files with fewer people, and that has a real impact on the value you can realize. So adding revenue growth into the mix is an important aspect too. And again, that technology just enables you to get to that McDonald's kitchen sort of efficiency. So one thing I would say is think, and I've advised many entrepreneurs over the years to think in these sorts of terms. If you today thought to yourself, do you know what, I'm going to take the next 3 weeks off, just think about how your practice would cope. Would it run efficiently without you there? Start thinking about whether you can start to take Fridays off. Every Friday, I mean by that. Is that something that would have a fundamental impact on the efficiency and effectiveness of your practice? And so really thinking in those sorts of terms are the kind of things that help you prepare for the potential to step back from the practice and realize some of the value. So what I'm going to do is I'm going to hand over to James to do a very quick demo. I think he's got about 5 minutes to sort of run through a few of the key points to really illustrate some of the points I was making. James, are you picking up on the technology?
Yeah, I'm just going to show my screen. And I think now everybody should be able to see see my work papers there. So just following on from what Gordon, Rich and Robert have been discussing, and there's a number of features in my work papers that can really help get your business ready for sale. I'm just going to show a couple of features from both perspectives. So both from the pre-sale side of getting it ready and how my work papers can make your business attractive to the prospective purchaser of the practice as well. So as Rich and Robert spoke about, when readying your practice for sale, it's really important to standardize your processes as much as possible. And with my work papers, you can do that. When it comes to just, for example, creating a file, it's really quick and straightforward to do. You can just select a predetermined template from the drop-down list here. All you need to do is then pop in your client name and click to create a new file. So the speed savings there are absolutely massive. Robert as well mentioned around the file roll forward feature. So we won't look at it per se, but that feature is if you've made any changes that are specific to that particular client that you're working on. In year 2, you can roll forward that file. So obviously if there's any kind of transaction and a practice takes over another, you can quickly, or it doesn't matter what time of year that takeover happens, you can roll forward the file from the previous year just to help with that continuity. There's also collaboration tools as well within the software. So you've got the ability as well when you're in a file to send email notifications through from here. So for example, you can send email notifications through to the manager and partner when that file is ready to be reviewed. Again, with other practices that are using the software, We just find that that helps streamline the sign-off process, makes it much quicker than the traditional way of either just sending an email with files attached, or if it's a paper file, handing that over. From the prospective purchaser's viewpoint, again, practices become much more attractive with processes in place. This leads to smoother handovers with clients, which, just to kind of link back to what Rob was saying around multiples, it helps that multiple and makes the software and makes the practice become much more an attractive investment. From the prospective purchaser's viewpoint, they'll obviously have access to every single file at their fingertips if the practice that they're looking to purchase already has a system such as My Work Papers in place. They've also as well got a very easy system then to review files. So obviously they will need to get up to speed on all the new clients that they're taking over. You've got quick access here on the trial balance screen just to all the financials from that particular year. As you can see as well, you then got links through to the supporting documents that are linked to those figures, any tick marks as well, and you've also got any notes there that have been attached to those lead schedules by the previous owners of the business. There's also a couple of reports as well that are really useful. So the first one is the review points report. And with the review points report, it will show you any review points that's added to My Work Papers, and you can filter through based on who they're assigned to and things like the status, whether they're resolved or not. So again, having a process like that in place, or a system like this in place, if another practice is taking over your business, they will know exactly where all those review points are up to, and they'll make sure that nothing gets missed, just to ensure that continuity of service with the clients. Likewise as well, there's also the workflow manager, and this basically just shows you every single file on the system. And as you can see here, you can see the status of those files, where they're up to in terms of completion, and you've got the ability as well to filter through. So again, if you're taking over a practice or readying your practice to be taken over, anybody can see where all those files are up to, again, just to help with the handover. There's also another, as you would expect, multitude of other features within My Work Papers. If anybody wants to have a more detailed look, we can certainly get that arranged after the webinar. But in the meantime, I believe I'm handing back over to Rich at the moment.
Done. Gordon, Q&A.
Yeah. So let's see where we've got to, guys, on Q&A. So got one here from Jonathan. I'll read it because I think it's a nice starter for 10. Thank you, Jonathan, for the question. What's the difference between My Work Papers and Centre and Accountancy Manager?
Centre.
Centre, yeah, it's a practice management software.
Yeah, okay. So I'm not particularly, well, I'm not at all familiar with Centre. But so My Work Papers has a light practice manager in the sense of the workflow, seeing where jobs is at. We do not have a time and cost. Generally, a lot of the clients will work with our system in parallel to their own practice management solution, which they keep in time and cost, where they keep their time and cost and their billing, and they keep their workflow going through us. And again, we have some clients that unfortunately have to duplicate certain things in their workflow because they do like carrying and capturing ours, because again, it's in the cloud. With certain providers in the marketplace that provide time and cost, we've been trying to work with them for integrations. We have that handshake availability, but the problem with a lot of the systems in the marketplace that are used widely by the firms in the UK, they're desktop products that have, in most cases, have been end of life, and they're not doing any investment on those products to try and allow the handshakes with the likes of our product and other products. So, so yeah, that's my comment before I dig myself a deep hole there.
The only thing I'd add to that is, again, I'd not come across that particular product before, but essentially, this is the space in which you do your work, not so much the space in which you kind of measure your costs and time. And doing the work means having two-way integration with Xero, which we just launched a few weeks ago, QuickBooks Online. So all of the bookkeeping software automatically uploads. Again, it makes it completely seamless, it makes it error-free, and importantly, we've got integration, seamless integration out with Iris and accounts production. So essentially, it's the engine in the middle of the practice, the space in which you do your work, as opposed to just a mechanism for you to manage your team and bill your clients.
Right, so let's just pick up on that. So you're bringing the data in from Xero, you're bringing the data in from QuickBooks Online. What if you're bringing the data in from Sage? Do you just put that onto a CSV file, or how do you bring it in from other places, Robert?
Precisely that. So basically, if anything's downloadable into CSV, it can be automatically uploaded into my work papers. So essentially, what you're doing at each stage is making sure that your transactions are error-free, and it minimises the human error aspect of that.
Okay, and then you mentioned that it's fully integrated with Iris Accounts Production. Is that the one that is your chosen partner for accounts production, or is it just so happens that's where it is, or where else are you in terms of accounts production?
So I'll answer that. So yeah, there's a long history with Iris. We've been working with them since 2014 when we launched Iris Open Audit, which was our product that they white labeled. So we've had a friendly relationship with them, but look, we work with all the other accounting firms and accounting software, accounts production tools. Unfortunately, we don't have the levels of integration with those yet, but we are talking with them all. And most of those that are large players in the market, again, are dealing with legacy products that they're trying to implement new technology in the marketplace. There is some discussions going on with other smaller players in the marketplace that do have that are more agile and watch the space in regards to those integrations. But I think the key thing with what we can do, and the example of Sage, is that if you import Sage as a CSV file, we have the accounting structures in our platform, and you map over them. So the need to code, or I'm missing the word out of my mind, but to align the import of the trial balance number to the accounts production, so to your trial balance chart of accounts is automated through our platform. So you overlay and the accounting structure to that CSV import. Likewise, when we export it out, we can export it out to the requirements of CCH or Tax Filer or Tax Calc, or there's a direct integration with Iris. But where things are going is there will be integrations with all those providers.
Well, I think that was what I wanted to draw out for the benefit. So if I'm running with Iris, then clearly that works for you. But if I'm running with Xero, or most of my clients are with Xero or QuickBooks or with Sage, that doesn't seem to matter too much. And if I tend to be currently looking at CCH, then that works fine in terms of the accounts production or tax files. There's nothing there, is there, Rich, to say, yes, but the only one that when you go and produce an Amex card at the shop and they say, that's the only card we don't take. There's nothing NYP say, you wouldn't touch them with a barge pole. They're the one players. If you're there, I'm sorry, but we can't play ball with you. Is that the case, or is it you will take anyone? You can deal with anything?
Looking across our 1,000 clients, we've got every form of accounts production, every piece of software, every form of bookkeeping, right down to paper files, and every single one of them gets value. Now, they all get different levels of value, absolutely, depending on the level of integration. But every month, every sprint, we're launching new integrations and new partnerships. So as Rich says, watch this space. You'll get value from day one, you'll get more value on day 2, and even more on day 3.
Okay, now I heard, and it wasn't from one of you guys, but I have told you what I've heard, and you said, oh yes, that's true, but now of course I've heard it, I can't remember it. How many hours on average, if I engage my work papers, and I said, right, that's it, we're going to use my work papers for accounts production and audits, how many hours on average across all of my accounts production clients do you expect me to save per client?
We've got a couple of really great case studies. There's some very large groups of practices that have adopted our software. They're talking about an average of 2 to 3 hours per year end. When it comes to audit, it's considerably more. Just think about how long it takes to actually set up an audit file. What you saw a few minutes ago there from on James's demo is you could pretty much do that in minutes. Now it can take a day to set up an audit file. So having Mercia, having all of that kind of built in terms of the processes, and we've just launched now with HAT as well. You've got all of that behind us in terms of actually having the work papers there set up on day one, the second you create the file.
Well, needless to say, I wouldn't have you as my guest if I didn't like what you guys were doing. Let me see if I can draw out some people. Now tune in, team. So I'm going to ask you a question, and the question is, would you like to find out more about my work papers? And all you've got to do is say, yes, very, very interested, which is a 5, or 1, which is the posh version of I'm already a client. So if you guys can just vote quickly for us, then, oh, you've done a sterling job, chaps. People love it. Oh, look at that. Haven't you done well? Yes. They are interested. Let's just keep that going for a few more minutes while people work out how to do a vote. Always an interesting one. It took me a while when I first started to get the voting system sorted, but yeah. A few more seconds, guys, if you want to just vote. It's good if you also vote sod off. That's also a good vote because we know that we wouldn't invite them again. So that's the other thing. But now you're doing that. That's very good. Very kind of you. All right, guys. Couple more seconds, vote away. Whilst that's happening then, Rich, Robert, James, do you want any closing comments, any closing remarks?
If I start, and then I'll hand over to Rich. So look, the only thing I'd say is not everyone's thinking about selling their practices. Yeah, absolutely. Creating value is something we should be doing at the start, the middle, and the end of the life cycle of any business that we're responsible for. The only thing is, we've seen certainly over the last 6 months that no one knows what is going to happen, what's just around the corner. But one thing is absolutely true. Unless you create the value within your practice now, unless you adopt the best practice processes and systems, you can be assured that anyone who does acquire your practice will do it after you've gone. So why leave the value on the table? Get the value for yourself. Don't leave the value on the table for the acquirer. The other key thing I would say is be dispensable. My favorite word. So don't make yourself indispensable. Think about how you could extract yourself from this practice. Have a trial run. Go away for 3 weeks. Take Fridays off. And most importantly, get ready now. Even if you don't plan to sell, get yourself into a position where as you're efficient as you can be, and you've got the ability to grow. No restrictions on growth. So that's my summary. Thank you for watching. Rich.
Thank you, Robert.
Rich?
No, look, I think you've summed it up well, Robert. And my only comment is make sure you have your plan to get to the crossroads where you've got the options.
Yeah.
James?
Yeah, nothing from me. I think Rob summed it up perfectly.
All right, guys. Well, thank you very much indeed for your input this afternoon. Found it fascinating. You guys out there, take good care of yourselves, and we'll see or speak to you very soon. Thank you very much, guys. Bye for now.
Thank you.
Thank you.
Thanks, everyone. Bye-bye.